Welcome back to Wall Street Confidential. Jim, today is the first day of the Fed's two-day meeting. Analysts are expecting that another quarter-point cut.
Well, the journals put through this theory, and I've got it also. I hear it from a lot of people, which is that they're being stampeded into making a cut, given the fact that oil's up, given the fact that that we're seeing kind of the food complex up, so therefore they should be tightening it. And my theory is that you could take rates to any price, and it wouldn't matter. Those things are just out of the Fed's control. But what is in the Fed's control is just the remarkable deterioration in the domestic economy. I think if you go and listen to literally any conference call, with the exception of maybe Costco, which offers a really good product, you're going to hear the same thing over and over again, which is at the very top, they're going to say, look, obviously domestic's bad. Now, why anyone thinks that domestic should be bad is, to me, a testament to how many people are bearish and want to be short. The thing that would knock the market down huge, obviously, is if they don't cut. So if I were short, if I were betting against this market, I would be putting out the word that they're not going to cut, or I would say, look, they shouldn't cut. And I find that this has been going on all year. All year people have been in denial about how weak the economy is. All year people have been focused much more on inflation. It's deflation that I'm worried about. When you have $8 billion in losses, that's $8 billion that vanished in credit. Now, I think there's going to be $500 billion that's vanished. Now, when $500 billion vanishes, it's a sign of deflation, not inflation. Inflation is not going to create $500 billion worth of price increases. And I think it's important for the Fed to try to save. You can't save Countrywide anymore, and you can't save AMBAC, you can't save PMI, you can't save MBIA, you can't save, maybe you can't save Washington Mutual. I don't think you can save anybody who took a mortgage between 2005 and 2007 and took the down payment and paid it with home equity. I think they're all wiped out. I think the important thing is to try to not wipe out the people who took loans in 2007, which is why the Fed has to move.
Now, you mentioned bringing rates to any level, but what about higher oil prices, grain prices, the weak dollar?
There's not, those are bad. Those are bad, but we have to recognize what inflation can be controlled by the Fed and what can't be. There's a sense that if the Fed doesn't cut, the dollar gets strong. The dollar is highly correlated to economic growth, not to the price of money. I've seen whole economies raise interest rates to be able to defend their currency and fail repeatedly. Where people want to be is in a country that is controlling its own fate, tends not to have as big a trade deficit as we have, but is growing. And our country's not growing, so therefore you don't want the currency.
If we don't see this cut, is Armageddon back on the agenda?
Yeah, it has to be. I mean, I wish people would recognize that a place like Countrywide is fighting for its life. Now, when in 1990 all the banks were fighting for their lives, this time, while Bank of America is deeply troubled, it's not fighting for its life. Wachovia, deeply troubled, not fighting for its life. But you will see, as these companies report quarter after quarter of losses, that people will begin to see this thing very differently. And you want to coordinate. You want to just say, okay, listen, we're going to lose Washington Mutual, but we're not going to be willing to lose anything else. And that's why the Fed has to cut very big, because they will lose everybody else. Now, I mean, people say, well, wait a second, Jim. You just said that Wachovia could be in trouble. Well, I heard in 1989, I was saying that Citigroup could be in trouble, and Security Pacific could be in trouble, and Bank of Boston could be in trouble, Manny Hanny could be in trouble. And people were just saying that's just not possible because they're too good. And, they were all in trouble. I'm not saying I'm a seer. I'm just saying I read the balance sheets, and the balance sheets are signaling that there's just a lot of stress in the system, and we don't want to get it out of control.
Okay. Fed, listen to Jim and avoid Armageddon.
Right.
Jim Cramer, Brittany Umar, Wall Street Confidential.